Bob just mentioned those renewed fears of a slowdown in global growth, which is something that we talked about yesterday. But today, it was once again a big focus for investors. Steve Liesman has more.
Just a few months ago, markets fretted about global central banks ending their easy monetary policies. Now, faster than you can say global central bank policy reversal, those same banks are slashing their growth forecasts, dialing back plans to tighten policy, and in some cases, even easing interest rates. Today, the Bank of England, citing global trade tensions and concern over Brexit, cut its growth forecast for 2019 by half a point to 1.2%. Some analysts who thought the Bank of England would hike twice this year now see no hikes. In the U.S. last week, the Fed shifted from a policy of gradually increasing rates to a policy of being patient, figuring out what its next move will be. Fed officials still see the U.S. economy on solid footing, but global economic weakness is clearly their biggest worry.
You look at what the risks are, and I think global risks are probably the most significant ones, and that will be what I at least will be looking at over the course of the next 6 months is how does that evolve?
Forecasters now see that evolution more to the downside. The European Union shaved 0.6 percentage points from its annual outlook, bringing it down to 1.3%. Australia's bank shifted into neutral, and India even lowered rates. The People's Bank of China cut its bank reserve requirements, making it easier for banks to lend. It's not her base case, but former Fed Chair Janet Yellen believes that the gathering global clouds could prompt the Fed to cut rates as its next move. Would you say that it's possible the next move is a cut by the Fed?
Of course it's possible. If global growth really weakens and that spills over to the United States, or financial conditions tighten more and we do see a weakening in the U.S. economy, it's certainly possible that the next move is a cut. But both outcomes are possible.
What the U.S. Fed ultimately does will depend on how much that weakness washes up on American shores. A U.S.-China trade deal could alleviate at least some of the worries, but it's not clear if that will happen fast enough or will be enough on its own to eliminate the gathering global risks. For Nightly Business Report, I'm Steve Liesman.